Today I'd like to talk about our updated model for the ASX 200. The reason I thought it would be good to discuss the model is because our market is in a modest seasonal correction. The market seems to have peaked somewhere above 7,500 in terms of the ASX 200 sometime in August, and has now drifted down to a level of about 7,200. Where is actual fair value? What is the market worth? We can update our model using the data. On this occasion, we'll use the data from the 1st of January 1999, and in our model there are three variables. The most important of those variables is, of course, earnings. Earnings per share of Australian equities have increased very dramatically this year, and that's what's increased the fair value of the model. And as we can see, we've had a very strong market. Our model tells us that our market works on an average PE of about 8.75. So that means that for every dollar in earnings that goes up, the Australian equities market will go up $8.75. So the increase in earnings has put strong upward pressure on fair value in terms of our model. The other thing that's really, really important is Australian 10-year bond yields, and our model tells us that each 1% rise in 10-year bond yields reduces fair value of the market by 272 points. And why that's important at the moment is that what's been happening since August is we've started to see an increase in bond yields, and that has reduced the fair value of the model. Those two variables, together with our US corporate spreads, explain 91% of all the variation in Australian equities since in the last 22 years, since January 1992. So it's still a very, very powerful model. So what it's telling us at the moment is that we are in a modest seasonal correction. We normally have a correction at this around about this time of the year. It's no surprise for us to have an August peak and market decline in September. But one of the reasons that it declines in September is not to do with the Australian economy, but to do with the US economy. The US government year ends at the end of September and begins on the 1st of October. And that means that corporate taxes are paid mostly in the quarter leading up to September. So as money is coming out of the market by companies paying their taxes to the government, that puts downward pressure on US equity prices because of the stress of liquidity in the US market, and that downward pressure on the US equities puts downward pressure on the Australian market. Now, what normally happens in the US is that you then have a period of recovery in the next quarter, and that recovery is because there is more money going out of the US government in terms of spending than is coming in taxes. It's the normal cycle. This year, that pause in the market, however, is extended by the virtue of the fact that we have uncertainty because of the US government, that is to say the US legislature, which is spending time, at least one side of politics is, the Democratic Party, is spending time arguing over the composition of the budget for next year. How big will it be? What programs are going to be in it? Is it going to be a $3.5 trillion budget, or is it going to be a $1.5 trillion program that's added to the budget in terms of welfare payments? This is what's currently being argued. It was hoped that there would be agreement on this by the end of September, but politicians, being politicians in the US, they can't agree, and they've pushed forward the deadline for the decision to the 3rd of December. We know that the deadline is at the 3rd of December because that's when the debt limit, the extension to the US debt limit to fund the US government, has been extended to. Now, what they will do sometime before the end of December, when they come to agreement, is they will pass their budget, and as part of their budget, they will pass an agreement to increase the debt limit. But that will happen by December. While that's happening, this discussion is generating uncertainty in the market, and so we think there will be more downward pressure, gentle downward pressure on the market, probably until the end of November. Where does that put us in terms of where is fair value in terms of our market? Well, if we put in those variables of earnings per share, bond yields, and the cost of international funds, we think that fair value for the Australian equities market now is 7,178 points. It's come down, the market now is just about 90 points higher than that, and it's come down from about 7,500 points in the middle of August. But as the market has been in decline, it's come back to fair value. We think we could possibly undershoot our fair value between now and the end of November, but we think there will be a recovery in the market from that will then be pretty cheap territory when you finally get agreement of the US legislature about funding next year. So this is a reasonable seasonal correction in the Australian equities market, which has taken us down and restored value in the market, and that puts us in a situation where we think there will be a significant recovery in the year ahead once the US legislature has actually created a budget sometime by the 3rd of December this year.